Hey, fellow investors and fellow stock guardians. It's Wednesday, March 24th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from yet again a red stock market. I looked into the stock market indices movements and dug into two companies suggested by Marisa, Cali, and Joyanta, Raksmith as starter portfolios picks in March. The two stocks couldn't be any different, but happen to share a passion for electric vehicles' future. Let's get to it. The stock market indices continued their downward trend and finished the day in the red once again. More than 7,000 companies finished Wednesday in the red, while 3,500 ended the day above zero. If you're interested, you can get such data and information from a StockGuard's website, the Popular tab. What drove more than 7,000 stocks below the zero line wasn't anything new. As we have discussed before, the third wave of COVID-19 lockdowns in the EU and worries about inflation are among primary reasons the sentiment has turned bearish in the last few days. Yesterday, I asked you for your stock suggestions for the 2021 starter portfolio pick in March, and I've featured two suggestions today. First up is Blink Charging, ticker BLNK from the EV list of stocks. I looked it up on StockGuard. It's an owner, operator, and provider of electric vehicle EV charging services and stations for residential and commercial purposes. You know how Tesla charging stations are all around us and they're branded as Tesla charging stations? Blink is a non-branded version of the same stations. The stock price was down approximately 8% today, and the company is far from its record high price of $64.5 in the last 52 weeks. I'm evaluating this stock as a potential fit for a starter portfolio, which should be a stable and reliable type of stocks good enough for a new investor. The company operates in the growing EV market. That's a thumbs up right there. Its revenue is expected to grow significantly in the current fiscal year. That's good too. It has enough cash and no debt concern, making its operations reliable without immediate need to raise capital or borrow money. That's another thumbs up. In contrast, Blink is not profitable, and based on valuation ratios such as price to sales or price to book value, it's pretty overvalued. Those are some thumbs down. So the story here is a startup type company in a growing market with rapid growth, no money concerns, and high valuation, even after a 50% drop from its record high level. Not a stock I'd personally add to a startup portfolio because of its high volatile stock price, but certainly one to watch for more risk-taker investors who can tolerate volatility. Blink's most significant challenge is how capital intensive it would be for it to become a market dominator for charging stations, competing with branded charging stations and home charges. It's a good business, but hard to scale and may not grow its sales by 280 times as its current price to sales ratio suggests. The second stock suggestion for a starter portfolio from one of our fellow stock guardians is Berkshire Hathaway B shares. Of course, Berkshire is run by Warren Buffett, who owns, operates, and invests in several other businesses. As it's apparent on the company's stock card, it has solid operations, exuding profit and cash. However, it has been an underperformer compared to the S&P 500 for quite a while. It's also an undervalued stock, especially if you look at its price to book value in comparison to its relevant sector. Those are some of the reasons the stock would make a good starter pick. What's forgotten about Berkshire is its significant investment in the EV and future of energy. Those are capital-intensive investments that would make a decade to pan out, and that could justify why the stock has underperformed the S&P 500 in the last decade or so. Berkshire's risks are leadership changes that would be very likely in the next few years as Buffett and Munger retire. It's also a company that doesn't care too much about its stock price and can tolerate underperformance years before it takes any action, So Berkshire could be the next startup portfolio pick if we do not find any better option. The two startup portfolio suggestions turned out to be very different stocks with shared interest in electric vehicles future, a startup that rode the wave of heightened demand for EVs, and an old-timer who looks for the future of energy. Thanks Marisa, Cali, and Joyanta Raksmith for those startup portfolio pick suggestions. Folks, let's keep searching for the best startup pick for a few more days. If you have suggestions or have companies you are considering for your startup portfolio, let me know in the comments or email back when you receive today's episode. We can research them in the next few episodes. As always, if you'd like to give a stock card a try, research as many stocks that you want, and receive a stock pick ideas from successful investors, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you tomorrow, folks.